Sunday. We're taking a look at the S&P 500 as we get ready to trade August week 3 already at monthly OPEX. And on Wednesday of this week, we get the Fed minutes. Just like the Fed interest rate decision and statement comes out on Wednesday at 2 o'clock, 3 weeks later, we get the minutes of that meeting, and that's what's happening this week on Wednesday, 2 o'clock. Let's start off by looking at the intraday chart. Here was Friday's move, kind of a frustrating move that we made our high right at the beginning of the day, kind of sat sideways, kind of pulled back and tested and held well above 44.60, and then at the end of the day had this move that didn't quite take out the high, but stuck the landing and gave us a new all-time closing high and weekly all-time closing high at 44.68. So this 44.68 level offers up a new level of support. If we come out of the gate and break out over it on Monday, we want to see this level this level help support the market for the week. And by the end of the week, we need to be closing back above 44.68. Otherwise, that's a failure to make a new weekly all-time closing high. Let's roll back here to see how this move began. On Wednesday, we had a gap up open, but another frustrating failure against 44.50. And it took us until Thursday morning, coming in, testing this 44.36 level one more time, and then finally breaking out over 44.50 and seeing the 80 handle rule finally begin to play out for us with our move throughout the day on Thursday and then continuation on Friday. Closes and holding now above 44.60 because we just sliced right through 44.50 and didn't screw around with that level at all. When we take a look at the simplified daily chart, I wanted to show you a possibility of where we could actually be going. This little purple box, I just put this around to show you the range of the last rally that we had before this one that we're in right now. This rally started with a sell-off down on July 19th to a new July low, and then finally we rallied over the course of the next several sessions till we got to the end of July, July 29th, and made a high there, and then pulled back, and now we're starting a new relay here. But in this one, this is how far we went and how long it took. We roll this box sideways here back to this last move, this move that prevailed starting from the low on June 18th and lasted all the way to here. You can see it took twice the amount of time and went quite a bit higher in range. And if we go all the way back here to May, the low on May 12th, and we see that this move went all the way to here and was similar in range, or maybe just a little bit more in range than this move that happened in July. And it took more than twice as long for that move to prevail till we got to the high on June 15th. So basically a good average point in range, conservative in range, but maybe a little too aggressive in time. Because right now at this point, if we lay this move down on our August low, we pretty much on Monday we will be in the same time frame as this. But like I said, this could extend on twice as long or even more than twice as long to get here. But my big point I'm trying to make here is look at this range. Look where this would get us. To match the average move of the last two, 3 rallies, we would get all the way to 45.72 just to match this move. And there's a real interesting point that we are arriving at soon at 44.74. We double up the range from the low, from the COVID low, when we traded down to 22.21 or 22.36 or whatever. If we double that move, that gets us to 44.74. CNBC is taking a page from my book. That's like a target that I would come up with. And I laugh because, talking head after talking head keeps coming on CNBC and saying it. It would be interesting to see us make it to 44.74 and then just blast out of there and put another 100 points on the board. And that's how we would get up here to this 45.72 plus level to just mimic, just the range that we've done in these last 3 relays before the one that we're in now. Okay, so food for thought there. Let's take a look at the roadmap and talk about what needs to happen next week. Our first line of support is 44.60 flat. Our low on Friday came down to 44.60.82. Our close on Thursday, the previous all-time closing high to this one we just made, 44.60.83. So a 1 penny look below the close. That marked our low of the day on Friday. That 44.60 handle is very important. It's part of our 80 handle rule. As long as that holds, we're going to keep on grinding higher towards 44.80 and then finally on to 4,500. If we come in and we were to break 44.60, our next line of support is going to be 44.50. And we must hold 44.50, otherwise we are going to probably fail all the way down here to the 20-day simple moving average, break the 10-day, take this whole range and double it down from the break of the 10-day, gonna get us to the 20-day and fill in this gap all the way back here to the August 4th close, and that would be a move almost to 4,400. That's the 80 handle rule playing out. We spent so much time trying to break out over 44.50. If we were to break it this soon, we'd probably fall all the way back here to 4,400, and see that whole 80 handle rule play out, but in the reverse direction. But like I said, if we hold 44.60, we're just going to keep grinding higher, and that is that. Let's take a look at the options. If you are still in these Monday expiration options, you shouldn't be. You should have gotten out of those, at the end of the day on Friday. But if you're still holding them, hopefully you're in these 44.65s, which held the $8 window on the close Friday. If we move on to 44.80, these are going to be worth $15 plus premium, so these will have made you a double if that plays out on Monday. But you're really playing with fire being in these, so no new entries into these on Monday morning. What you want to be looking at are the August monthlies. Over on the call side, some good volume here in the 4,500s, but I gotta say, these are not a window price, so these would not have been something I would have been interested in. I would have been looking down here at the 44.75s or the 44.80s. Good volume here in the 75s. But in between windows, kind of trying to hold the $11 window on the way out, or these 44.80s. And then finally, if you wanted to go out to the Friday end of day expiration, once again, your 44.80s to 85s, or you come all the way up here to these 44.95s, maybe 44.90s. I don't like to be the first one in the 4,500s, the new handle. I'd rather be a little bit below there, so that you can make money for sure on those if we make that move against 4,500. If you're all the way up here in the 4,500s, I like to be in an option that I think can go in the money. And I'm not 100% sure this week that we'll go over 4,500. So anyway, that's that on the calls. Hope that all made sense. If not, you can shoot me a direct message. Over on the puts, this is a real interesting thing that that's going on here with the 44.50 puts, the August monthlies. These had big volume in the morning. I pointed it out in an early tweet on Friday, and you can see that over 8,600 of these moved on Friday. Way, 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 way more than the open interest. So this is kind of interesting in that I pointed this volume out because I thought that this pointed to the idea of short puts, a big player just shorting the hell out of these 44.50 puts, trapping all this long put stuff in here. And if we come out of the gate and we cannot crack 44.60 on Monday, I'm going to be right about this, that this is a short bet. But if we do crack 44.60 and come all the way to 44.50, there's a chance that it could break, and it could be that this player is back in control, this one who kept us controlled below 44.50, and he wants to get back in power again, or he or she, whatever. That could be, the agenda. So it's really important that if we break 44.50, you step aside and don't be buying any dips, or you join in on the fun and buy some puts, looking for that move all the way down to 4,400 for monthly OPEX. So that's my explanation of what's going on there. Like I said, I think it's going to hold. I think that this is a big fat player who has been shorting these. If I'm wrong, though, and those are long, you know what to do. If we go out to the Friday end of day, you can see this pretty big volume here, although the open interest was pretty large. So this could have just been, people closing these up and leaving Dodge because they know that they're going to lose all their money anyway, so they might as well get out now in these Friday end of day expiration 4400s and 4405s. And then some pretty good volume up here in the 44.50s in these as well, holding strong in the $11 window. Okay, that's it. I hope this video helped you out and gave you a good idea as to where we are going to next. Very intriguing, that 45.72 to 73 level, isn't it? Another 100 points on the constant repeating target that CNBC keeps talking about of 44.74. Have a great rest of your Sunday. As always, good luck and good trading.